Hello, this is Kei from Japan. In this video, I'll be talking about how you can avoid jumping into the market, and I will tell you the psychology behind so that you won't be doing the same thing over and over again. And after you watch the video, you can say sayonara to jumping into the market so that you can really wait for the right timing for your entry. So let's get started right now. A definition of jumping into the market will be like this: an emotional trade without planning. And you can also call it as a careless trade or a reckless trade, like, oh man, the price just broke the resistance line, so I better buy now. And after that, you go, oh man, that was a fake. This is one of the typical examples of jumping into the market, and I get lots of comments about this kind of trades, and oftentimes they say they know they have to quit such a trading, but they can't. They keep on doing it. So today, after you watch this video, I hope as many traders as possible to avoid such a trading in the future. So let me get into the conclusion first. Those who cannot help jumping into the market have fear of opportunity loss. The opportunity loss means to think like this: I was supposed to win when I placed a position at that place, but because I didn't, I missed the profit. Like, for example, when there's a famous ice cream shop at the mall, let's say, and you really wanted to, eat that ice cream, but you're busy at work. So you could have gone to get the ice cream because it might be sold out, but eventually you decided to go after the work. Then you find all the ice cream is gone. It's all sold out. And this time you might think, I knew it because, I knew it will be sold out. I should have come earlier, In Forex market, it's like the same. Like, you thought you should buy at that place, but because I didn't buy there, I didn't get that profit. And this kind of feeling is called opportunity loss. And once you experience this kind of feeling, you will have a habit to jump into something, because psychologically people tend to feel that pain of loss a lot more than the joy of earning. And this is called prospect theory that I talked about on my previous video. So more than just getting a profit, the feeling of loss of an opportunity that you should have been able to earn that profit, that second feeling becomes about as painful as the actual loss, or even more painful than the actual loss. You're not actually losing any money, right? But psychologically, you have a similar damage to your emotions. And to avoid that pain, people just jump into the market. Your mind says, I could not get that profit earlier that I was supposed to get just because I was not placing a buy there. And because you cannot endure such an emotional feeling, next time you decide to jump into the market and place buy. So how can you avoid this? Well, in the first place, trade should not be executed while you look at the chart, but even away before, you better think, if the market becomes like this, I will do that. You better predefine the market beforehand. On my previous video, I was explaining about how to create trade scenarios. I will put the link on the description below to the video so you can watch it later. But when you just open a chart and think whether to trade or not at that time, it's way too late already. But rather, whether to trade or not should be predefined beforehand. Of course, you need to change your mind as you look at the price action of the market, but those who just jump into the market like that simply lack their advanced preparation for their entries. You just open a chart and look at the market and might be saying in your head, let's see if I should trade now. In this 5-minute chart, the price is just broke, the line upwards, but in 1-hour chart, it's a downtrend, right? So it might be a fake breakout in 5-minute chart, and maybe you go, so how many position sizing should I choose? Should I place to sell here? Things like that. But to be honest, if I were in that kind of situation, I wouldn't trade, because these kind of things should be decided way before it really happens, because each entry is important and precious to you, right? Imagine when you want to say I love you to someone who you really love. You never suddenly think, oh, let's walk up to her and tell it to her right now, right? But rather you prepare to select the location where to say, and also what kind of words to say, right? Like you take time to imagine and prepare how to tell your feeling to your lover in the actual condition. And that way, the possibility of getting yes from her will increase. So preparation never becomes too much. The more you prepare, the better the result it becomes. And in Forex trading, on each trade, you need to focus on increasing the winning rate as much as possible. Even if it's just 1%, it means a lot. So you better stop going in blind, but rather better to create few scenarios way before the market moves to a certain condition and get ready to be able to deal with the momentum no matter how the market moves later on. And by trading like that, you can quit jumping into the market. And usually when you just jump into the market, generally speaking, the winning rate becomes lower and the risk reward is not really good. So even if you thought you missed that opportunity, you need to have a psychological margin to be able to think the chance will come, so I will just wait for the next chance. And interestingly, the opportunity loss, right? Like if I have a place buy here, I would have been getting that profit. That kind of negative image keeps and remains in your head. But there is something called positive opportunity loss. Like when I was buying here, I was losing big, so it was a right call not to buy. That kind of positive opportunity loss actually does not remain in your head. So that means this is just a bias that we all have, because when you think about it, it's just happened to be an opportunity loss by chance as a result. But it couldn't have been like that, because you never knew the outcome beforehand. So it's just a bias that's being created in your head thinking, oh, I've lost that winning chance. So when you think about this way, then there is even less reason to jump into the market. So again, those who cannot wait and tend to jump into the market, the reason of becoming like that is actually the fear to have the opportunity loss, and this is the primary reason. And to avoid this, the key is to create scenario before you execute buy or sell, so that you won't be fooled around with the price actions, to be able to accumulate the profit constantly. Alright, that's it for this video. If you thought this video gave some inspiration on your trades, please press a good button. And on the next video, I will be answering to one of the most frequently asked questions: how long will it take to be a professional trader? And I will show you a growth roadmap for all the Forex traders. So if you don't want to miss that video, please make sure to subscribe and hit the bell so that you get a notification when I upload the video, and also for my future Forex live analysis. Alright, stay gold. またね。